Money day, people. Hope we are all doing well on this Sunday morning. Quite early for me, but thought I'd get it started nonetheless. You're now tuning into another outlook released by Lit Capital regarding a forecast of events for the week ahead. So before we get into the outlook, of course, if you haven't already, please check out our website litcapital.co.uk to get started on your trading journey with us. Okay, if you're interested in learning the skill set, learning how to analyze the markets from a technical perspective and blending the fundamentals in with that, okay, hit us up. Go to our website now. There's a lot of inquiries you can do to start your trading journey. Okay, so as always, before we get into it, we're going to go look at the economic calendar in terms of fundamental news releases. There are a couple of days left of the month of October. Okay, so we're going to go into a new month. So we should have some high impact data as we approach November. Okay, so let's look at the chart, not the chart, the calendar, excuse me, and see what happens. Okay, so Sunday, retail sales for the yen, and then Monday, which is the last day of the month, of course, we've got PMI for China. Okay, so manufacturing data for China. We also have some retail sales for the Swiss franc. We also have retail sales for coming out of Germany and Spain. So a lot of Euro news. We've got GDP for Italy. Mortgage approvals and consumer credit for GBP is kind of important, but not really. CPI data and GDP data for the Euro zones, of course, as well as inflation rate data for the Euro. So that, everyone that's kind of in tune with what's going on, fundamentally, inflation is, one of the core elements of what the government officials, central banks are kind of looking to curb. So definitely pay attention to that. Any central bank that is kind of got inflation rate data coming out, you want to pay attention to that, okay? So Tuesday, new month, we start off with interest rate decision for the Aussie. We also have we have a speech by the governor as well, probably regarding the interest rates. He's probably going to speak about inflation as well. So for those that trade Aussie pairs, definitely be in tune with Monday and what that can bring. We have manufacturing data for the Great British Pound as well. We also have manufacturing data for the US. So, okay. And then we have unemployment data for the Kiwi, okay? So for those that trade those pairs, these are high impact releases you need to be aware of, okay? Going into Wednesday, we got PMI data for the Eurozones again, as well as ADP employment change, which is kind of like a pre-NFP for the US. See what that's saying. We have a Fed interest rate decision on November the 2nd, okay? Now, again, interest rates are flying up. This is stuff that we need to kind of pay attention to, okay? Especially the press conference. We need to actually understand what remarks and comments are being said in the US, okay? Going into Thursday, what else do we have? Unemployment, Spanish. Okay, inflation rate for the Swiss franc. That kind of stands out, but I don't really trade Swiss franc pairs. But for those that do, definitely check that out. Bank of England interest rate decision on Thursday. Okay. Oh no, wait, is this Thursday? No, excuse me, this is Wednesday. Okay, that's a weird. No, this is Thursday. Excuse me. Sorry, Thursday. And then later in the afternoon on Thursday, we've got jobless claims for the US as well as more manufacturing data coming from the US as well. And then Friday, what else do we have that stands out? Non-farm payrolls. Okay, so you got a lot of high impact data for the US non-farm payroll and an interest rate. So definitely be careful with the markets to this week coming, based on the fact that you're going to get probably a lot of volatility and maybe the wrong direction to then go into the right direction. Okay, so let's see what that brings. We also have employment change for the CAD as well and unemployment data for the CAD. So yeah, it's quite a busy week. Definitely a busy week as we go into the 1 month from December. It's getting crazy. So the end of the year is nearly among us. So as we go into the charts, I'm going to start with the S&P. Okay. This is kind of the swing that I still have. I want to go on the weekly chart and I want to point out a few things. Okay. Now, obviously, as we can see after making this new low, we've kind of been retracing the last couple of weeks back up. Okay. So very normal behavior in that regard after making a new low. This is still kind of the outstanding swing for the S&P. So there's still a couple areas, in my opinion, that prices can still get to in terms of, you know, capturing liquidity and stuff like that, and filling in imbalances and stuff like that. So I still think the S&P can still push up. Maybe the 4,000 region is possible. I don't see why not. We just kind of have to wait and see. So as we look at the S&P picture, we can also look at the NASDAQ picture, which is very, very similar in that regard, where we have the swing here, in that it's kind of mirroring what we're seeing on the S&P, the swing here. So currently at 50%, did get a decline off of that, and then we kind of pushed higher on the Friday to kind of cancel out that day. So off the back of that alone, we can kind of still see that the S&P is controlling the directional bias of the indices at the moment. And in doing so, we kind of should see higher prices fulfilled before potentially getting, you know, like a lower high made in that regard. So with that, we should anticipate higher prices going into the week. Now, there's not an immediate setup. We want to just see, as these levels are approached, what can kind of transpire in terms of a reversal. Now, with all of that fundamental data coming out, remember, especially the NFP and stuff, that's definitely going to have an effect on the indices. With the interest rate as well for the US, that's going to affect companies and organizations and corporations in terms of how they want to maneuver. Are they going to keep borrowing money at a higher interest rate, which is going to be more expensive in the long run and stuff like that? So that's what you've got to kind of link the fundamentals with. US 30. Now, US 30 and the rest of the indices have kind of been doing something different, okay? Now, what's kind of transpired here is, if you look at the actual swing prices of the NAS and US 30, you kind of have this area here on NAS and S&P, which is mirroring, but US 30 is not mirroring. So it's really still pushing higher. So what I've done on this one is that this area has been invalidated in terms of seeing a potential move off the 62%. If we go to the weekly swing, in the weekly time frame, we do have this weekly imbalanced area. So depending on how high we want to see the S&P push out, it still hasn't got to the 62%, you know, valid retracement and on the daily and stuff like that. So there's no reason why why US 30 can't still push higher as well, because we should be expecting higher prices with that. So bearing in mind that this picture is not really in sync with the other two indices in that regard. So it's definitely, you know, if you are more of a US 30 trader than a NASDAQ trader or vice versa, just understand that the correlation is a bit out of whack from a directional perspective. But nonetheless, follow the S&P, and you should it should lead you in understanding what is going on with the indices overall. So guys, I'm gonna go to US oil for you. I caught a great buy, and I sent this buyout to the community. For those that are in the Discord, I hope you you caught this move. Okay, so we kind of played out of this consolidation where we left these lows, and then we started to push to the upside. So in and around here is kind of where we gave this buyout in a smaller time frame, and we pushed up. So what I'm kind of looking to see in that regard, if we go and understand that we still have some liquidity resting above these areas, excuse me, we've got some liquidity resting above those areas. So I still think we need to push up as well. So the next area that I'm looking at will be just on the 70%, where we've got these equal highs here. That's kind of where I'm looking to get alerted to go into this slight imbalance around the 70% of the fib mark. So that's what I want to see happen. If that area gets pushed through, then the next area is at 79%, where we have a next. That's the main area I was looking at, but nonetheless, you still have to be aware that, you know, once you've kind of seen a valid retracement from a fib perspective, you are inclined to move to the downside. So that's kind of what I want to see with oil. I do think we are going to tackle these lows, and you know, this will be the prime area around on the 4-hour area. We want to see these highs taken out, liquidity grabbed, buy stops tagged in, all of these things, and then we can potentially look to maneuver the other way. So bearing in mind with the S&P and stuff like that, there is a slight correlation with oil as well. So if that does continue to rise before, you know, we do get a reversal, this, you know, definitely lines up with that. So that's kind of what I want to see with that. Rounding off with DXY, I do have a bias for the DXY. I do think we are potentially going to get up into this area here. I do want to see if we can pierce into this daily area here and then potentially reverse back lower. Now, why I want to see us reverse back lower is based off the fact that I think this area here on the daily makes more sense for us to maneuver down from. So where we've got this, we had this consolidation before pushing up. There's definitely going to be a lot of liquidity resting here. So I think if we push up and get above this 4-hour area here where we have some equal highs and then play somewhere within this imbalanced area and then push down, that's kind of what I want to see. Now, whether we do it on the Monday or later in the week with the interest rate or the NFP, that's why I'm saying within this particular week, definitely be careful, because there can be a lot of manipulation in the wrong direction, not even the right direction, which still breeds opportunity. Of course, you can still trade it if you know what you're doing. But at the same time, in terms of the overall trend, I still think we're likely to head higher. There's reasons to still go higher. So let's see what the dollar does in that fashion with the fundamental releases coming out as well. So that's kind of what I want to couple with. But my bias for this is pushing above these highs. If we tackle this area first, if we leave this area and we come down first, then cool, we can do that and then look to see higher prices delivered. But just be a bit cautious of, in and around, if it gets to midweek from Wednesday forward, you're going to get maybe slowed down price in terms of consolidation. Maybe you get volatility in terms of people getting wiped out of their trades for entering too early and things like that. So that's just how the market can kind of unfold for the rest of the week. So those are the pairs, guys, that I'm going to leave with you. Everything that's been discussed will be put into the Discord, of course, for the members. So anyone that wants access to become a member, is a £25 a month subscription. Head over to our website. You can sign up for that. So that's it, guys. We're going to see how Monday plays out, with it being the last day of the month. Okay, monthly closures are important. So see what we can see with that picture there. And then going into the new month, let's see what high reward setups avail. So Money Day, people, hope you've enjoyed this call. If you have, please like and subscribe if you haven't already, and comment if you've got any questions. We'd love to reach out back to each and every one of you. Thank you all for tapping in. And please remember, every day is Money Day. Peace.